going to start off with you. I mean, it matters the context in which earnings season happens, correct? And Dom was mentioning how already 80% of the companies in the S&P 500 have warned that a lot of the estimates are coming down going into earnings season. Also, in the month of June, the most analysts downgraded the most number of stocks since 2017. I mean, it seems like people are bracing themselves for a weak earnings season. So what are you actually expecting in terms of the market reaction to earnings?
Well, it'll be very interesting because nobody's really been focused on earnings recently because of the, of course, what's been going on with the trade deal and with what the Fed may or may not do. So the one thing is that they always seem to lower earnings estimates enough just so they can be beaten. So that I know that FactSet is actually looking for slightly lower earnings for the quarter, slightly down earnings. So they'll probably get beaten, but they beat them every quarter. So the key is going to be the guidance. Now, the guidance is always important, but even more so this time around because right now, consensus earnings estimates for the full year are only 2.7%, and it's much reliant on a very strong fourth quarter. People looking for almost 7% growth there. So if we suddenly get guidance for the third and fourth quarter that are much lower, that's going to be a very paltry for the full year, take it down to the low single digits, even down towards zero, which is not good. I mean, we're relying a lot on multiple expansion with the Fed with lower interest rates, but if those if those earnings aren't good, it's going to be a problem.
Yeah, I mean, the conference calls, Mike, are going to be key. I mean, when a company could take a free pass, right, and cite China trade war, why wouldn't you do that?
Yeah, I do expect it to be noisy and sloppy for that reason, Melissa. But the idea that, well, the stock market's at a record high as we head into what likely is going to be a pretty not so great earnings season, I think kind of conceals one aspect of it, which is more than a quarter of the S&P 500 companies are down more than 20% from their highs. So if you look at those stocks that are well off their highs, it's retail, energy, transportation, lots of industrials. So the places that are vulnerable to the earnings erosion have already been discounted to some degree. The market's being held up by the fact that bond yields, both corporate and treasury, are very low, and those kind of stocks that don't have much variation in their earnings power are also doing well. So to me, that's going to be the question. Do we get a little bit of confirmation that the second half of the year can hold up okay, and that means this is just a plateau in earnings growth and not a cliff? That's going to be, I think, the key. So what always happens in earnings season is a lot of offsetting currents. You have some stocks up, some stocks down. Index level volatility kind of gets smothered sometimes, but there's a ton of action under the surface. And I think the big question is, do those cyclical areas that have already been discounted by the market get any relief at all in the numbers? And
which are, by the way, a smaller impact on the overall markets percentage-wise, Matt. So, I mean, Mike makes a great point. I mean, if tech comes in great, financials are all right, you know, can the markets continue higher?
Yeah, I think it's going to be, I mean, obviously technology is always very, very important. And the estimates are looking for a decline of 11%. So that's very low, and hopefully they can beat that. The one thing, of course, you worry about is this whole thing with Huawei. I mean, we have uncertainty about trade. That looks like it's going to be a long time before it's settled. But even the Huawei situation, nobody really knows how many restrictions are being lifted, how many are not, and it's going to be hard for them to be able to come out with that situation, with strong comments on those situations. So that's going to be something to keep an eye on. If they give us a lot of uncertainty, a problem. If they can give us something that's better than those lowered expectations, it's certainly going to be helpful. But I'd also mention what Mike just talked about, the transportation stocks. Here's a group whose earnings have looked okay, not great, but actually a little bit better than the group has acted. So if they can come in better than expected and this lacking group can take off, that's going to be very positive for the market.